Spot Bitcoin exchange-traded funds or ETFs will attract a whole new wave of institutional investors, says America's largest options exchange, the Chicago Board Options Exchange. Responding to the queries of Bloomberg TV presenter, CBOE Digital President John Palmer said an approval will open the door to a new wave of institutional and eventually retail interest in Bitcoin derivatives. Palmer believes that the approval will pave the way for pension funds and RIA-based funds to invest in spot Bitcoin ETF. Many funds are currently unable to gain direct exposure to Bitcoin, he added. An RIA is a company registered with federal or state regulatory agencies to provide investment advice. Palmer's comments come 1 week out from the SEC's Jan 10 deadline, where it will be forced to decide whether or not to approve the ARK Invest 21 shares Bitcoin ETF application. Additionally, Palmer expects Bitcoin derivatives products to expand significantly following the potential approval of a spot ETF. Institutional players will inevitably lean on those derivatives more and more to hedge risks, he added. Palmer said it's going to be hard to judge what the breakdown is going to be yet, he said, noting that institutions lead the way in gaining access to hedging tools, but retail will also look for that as well. CBOE Digital is the crypto division of exchange which offers crypto futures and options trading. Meanwhile, some mutual funds have started to float plans to gain greater exposure to spot Bitcoin ETFs once approved.
According to reports, the fees that would be assessed if the two proposed Bitcoin exchange-traded funds are authorized have been decided by the issuers. A Fortune report states that the Fidelity Investments will charge investors in its Wise Origin Bitcoin Trust, which is 0.39% annually, while Galaxy Investco will charge investors in its BitCO fund, which is 0.59% annually. Regarding Galaxy Investco, the charge will not be charged during the fund's initial 6 months of operation. The information came from a court file dated December 29th, according to the newspaper. The article also stated that Jane Street Capital will be the authorized participant for the Fidelity, Wisdom Tree, and Valkyrie Bitcoin ETFs. This suggests that Jane Street Capital will have the ability to take advantage of price disappearances between the shares of these funds and Bitcoin. Cantor was listed by Valkyrie as an additional approved participant. Virtue and JP Morgan have been identified by Galaxy Investco and BlackRock as their approved participants. Authorized participants will not buy Bitcoin and put it into the fund, since the ETFs will employ a cash approach for creation and redemption. Instead, they will deposit the same amount of cash to the desired quantity of Bitcoin, which will thereafter be utilized by the fund to buy Bitcoin. According to the article, the US Securities and Exchange Commission has advocated for this option, saying that it does not want broker deals to handle Bitcoin.
According to CoinMarketCap statistics, Ethereum has experienced a spectacular rise in demand, driving up its price by about 10% in the last day. Following a series of tweets by Ethereum co-founder Vitalik Buterin on X, detailing the blockchain's revamped plan until 2024. The price has rallied. Buterin's 2024 roadmap highlighted 6 core priorities: the merge, the surge, the scourge, the verge, the purge, and the splurge. Also, with January 17 scheduled as a tentative date for a testnet launch of DogeCoin upgrade, market participants have begun accumulating the altcoins in anticipation of a rally. An analysis of Ethereum's network activity showed that demand had increased following Vitalik post. For instance, according to statistics from Sentiment, the average number of addresses that have traded the cryptocurrency since then has climbed from 444,000 to 448,000. Well, that's all in this special segment. For more such updates, watch 3.TV or log on to our website www.3versetv.io or scan the QR code. Thank you.